Tuesday, June 27th, 2017, Monaco 64, home of alternative economics and contrarian views. So, there's been some interesting comments and developments in relationship to central banks. I personally think, they're kind of concerned, or maybe they're not. Maybe they're testing the waters, or maybe they're going to bring the system down. I know when central bankers talk, their mission, given to the public is that they're trying to manage, the monetary system, the banking system, as well as possible to promote full employment, low inflation, stable prices, all the catchphrases they have. But personally, I think central banks are a monopoly, and they're owned, by the special interests, the same people that own the big banks, a lot of the assets, and they just continue to do, boom and bust. That's, that's their strategy. Get people involved, create a lot of debt, and then pull the plug, and then buy very cheap assets because they've got access to the printing press, so they can come, they can come out and buy things very cheap. Or, that's the, I would say, I guess people would say, oh, that's the conspiratorial view. But I think it's actually a fact. You look back, for the last 100 years, what the markets have done and how they behave and how central banks have behaved. It's very clear, and I don't think it's changed now. So what are the developments and comments from central bankers of late? Well, the Fed, of course, has been very relatively hawkish, raising rates already 3 times this year, saying they're going to raise again this year and another 3 or 4 times next year. A lot of people in the markets, the economists, are puzzled because everything's pointing to a slowdown in the economy. I know a lot of you out there think the economy has never recovered. We never got out of recession, and I agree with you, but that's the central bank talk. So yeah, there's the Fed. Now there's the ECB as well. This morning, Mario Draghi, president of the ECB, made some unexpectedly hawkish comments. According to Zero Hedge, it says Euro surges, Bunds tumble on unexpectedly hawkish Draghi comments. Bunds, by the way, are the German government bonds, 10-year government bond, actually. The 5-year is called a bubble in Germany. The 2-year German note or bond is called a Schatz. So the Bunds are the 10-year. And what did Draghi say? Well, let's have a look. It says here, speaking at the ECB's annual policy forum, Draghi highlighted a recovering Eurozone economy and that the threat of deflation is gone and reflationary forces are at play, and that the effects that keep inflation subdued are temporary and won't let inflation deviate from its trend over the medium term, but added that stimulus in the form of the ECB's monetary support was still needed. So there's always a condition. So the euro, of course, has rallied strongly against the dollar. Right now, euro's up almost 1%. It's off the highs. It got up to 113.05 actually from a low of 111.78. Right now we're at 112.75. So quite a strong euro move. The dollar is a little stronger against the yen, 112.05 up 20, and the pound is stronger against the dollar, up 0.37%. So yeah, so it looks like they're testing the waters. We also had just under 2 weeks ago, the Bank of England met, and the markets were surprised that three members of the MPC voted for a hike instead of 1, and 5, of course, voted for no change. So, and there's another interesting headline here today, and it's on Zero Hedge, and it says Bank of England orders banks to boost capital to protect from rising risks. So are the central bankers seeing something we're not? Are they trying to belatedly stop, the bubble they created? Of course, they don't call it a bubble. The fact that they've thrown so much debt into the system after the 08-09 crisis, their balance sheets are humongous. I think they're up to 14 trillion, the three major central banks, Fed, ECB, and Bank of Japan. The Fed had a 800 billion balance sheet before the crisis. But they don't admit to that. I'm sure if the system does come crashing down, the financial system, they'll find a way to, they'll find an excuse. They won't blame themselves. They never do. And maybe that's why they're coming out and being cautious and talking about raising rates. They want to be seen to be doing something. But personally, I don't think it's ever going to be possible to go back to where we were before 08. And why is that? Well, because the actions of 08, the QE, the money printing, Operation Twist, zero interest rates, comments from Draghi like saying he's going to do whatever it takes to save the system. Those things basically encourage the biggest asset bubble in the recorded history, I would say, of financial markets. And why did it do that? Well, because speculators and investors are not stupid. If the central bank is promising, we have your back, people will, rush into it. The problem is, and with leverage as well, there's nothing better, than making a lot of money and leverage, because then, you multiply your profits even more. But the only problem with that is now, if they try to unwind all this phenomenal bubble they've created, the central bankers, the same people that front run, the central banks from 07 to from 08, 09, from this incredible policy of loose money, zero interest rates, negative interest, the same speculators and investors, they're going to front run. And the problem is that once they start unwinding these speculative positions, it's going to create havoc in the system. And I think central bankers, I think they know that it will, but they're trying to pretend that they're doing it cautiously and gradually. And if there is an accident, they'll find another excuse, some geopolitical excuse, some war somewhere, some political crisis. But it's baked in the cake. Of course, we don't know when all this stuff is going to happen. No one knows. So what else is going on? Well, cryptocurrencies are getting sold off quite heavily the last few days. Ethereum right now is at 218, down 14% on a 24-hour basis from the highs. 218. So we got up to 400 recently. Ethereum, Bitcoin 2,290, got up to like 3,000 recently. LITECOIN 3460. Everything's down. A lot of the stuff, cryptocurrencies are down quite significantly. Steam dollar down 8.7% at 180. It was up higher today though. Steam dollar, it got up to like 252. I was surprised to see that. Steam, of course, is also getting hit, is at 150 roughly, down 17%. I'm not surprised with this move. I made a video on June 22nd, so 5 days ago, and it was entitled A Technical Look at the Price of Bitcoin, Ethereum, and Steam. And I did say that we needed time to consolidate, that the market had moved too quickly, And I even said that Bitcoin could come back down to 2,000, 2,200 and still be in a bull market. Same thing for Ethereum. I said we could come down to 200 or even less. I mean, we were trading 12 months ago below 20. Steam, Steam will follow, the leaders. So I'm not surprised with what's going on in cryptocurrencies. Trading, of course, as I said, is very tough. But I think, if anything, right now it's maybe a good time to add on if you want to buy some cryptocurrencies. What else? Gold today is traded back above 1250. We got up to 1250, 336. Right now we're at 1249, up $5. Silver, yeah, back above 1650. It's 1664, up 4 cents. So still, that was quite a big raid yesterday morning, London, around 9 a.m. London. Don't know what they're playing at. Maybe something probably to do with some derivative position in gold, like some kind of digital option, or like they have these options in the OTC market, LBMA market, that says, if gold is trading above 1250 at 12 o'clock on June 26, 2017, we will pay you $10 million. They do these kind of contracts for counterparties, the bullion banks. And what do they get out of it? Well, they get paid a fee. They write this option or contract for like 500,000 or $1 million. And so maybe they had to make sure that it was below 1250, so they wouldn't have to pay out 10 million to their clients. We will never know. Maybe we will in a year or two. Maybe some legal case will come out and they'll say, oh, it was Barclays or someone else, UBS, back in 2017. They smacked the gold market because they're supposed to pay a client something, 10 million if the market was above 1250. So that could be that as well. And of course, central bankers and the people who manage the system, they never get upset if gold goes down, actually. So they're not going to really investigate. Maybe they're not going to investigate it right now. This might come out later on, but they'll find a bank and they'll keep doing the same thing. So yeah, that's it. We sit and wait and see what the central bankers are gonna do. A lot of people, Jim Rogers, Charles Nenner, I think he's a psychoanalyst, quite a reputable guy. They're all saying that we're gonna see a collapse very soon, before the end of the year or next year. There's always that Economist magazine from 1988 predicting a new currency. I think it was the Phoenix in 2018, and the Phoenix was wearing like a gold coin around its neck. A lot of people say, with the Rothschilds being one of the biggest owners, I think, of the Economist magazine, that it's being done by design. Is that going to happen? I don't know. What should we do? Keep living our lives, not worry about it. We can't do anything about it except, to protect ourselves by owning, if you have assets to protect, by owning some physical gold, physical silver, and stacking, living within your means and enjoying yourself. So if you enjoyed this video, give me a thumbs up, share it far and wide, subscribe to my channel if you haven't yet, and you can watch me on steemit.com as well, and follow me there, steemit.com. I'll talk to you later. Bye.